Good morning, everyone, and welcome to the Trade Talk podcast. Today, we have to start with the world markets as the Fed held rates and indicated the next move would be lower, triggering an overnight rally in stocks and bonds. There is an indication that no more hikes and 75 basis points of cut in 2024. Mr. Powell insisted tightening remained an option with inflation is still too high, but acknowledged that the FOMC has begun discussing when to ease it. So, while looking at the specific news flow from the US markets and the way there was rally, we are seeing similar sort of trend in the Asian markets. All the indices are trading nearly 1% higher. Gift Nifty is also trading nearly 200 points higher, which is approximately 1%. And if we go through with the global macros, then 10-year bond yield is now trading below the mark of 4%. It is at 3.97. The dollar index is at 102.5, and these factors will help emerging markets in the near future. Based on technical setup, yesterday the market has broken the level of 20,800 in the morning. We saw the levels of 20,780, 770, and from there all the way it recovered back to 20,950 levels. So today, on the back of specific news flow, we may see the opening somewhere close to 21,050 plus, which was the immediate highest resistance level for the Nifty. So above that, the next level to watch out for would be 21,150 and 21,350 in the best case scenario. So these are the levels on which now we need to keep a watch, and ideal strategy should be to look for adding position if there is like possibility of getting Nifty above 21,050 levels. But in case if there is any higher opening about 21,100 or 150, then it is better to stay away from taking any position. Let the market come down to the support levels, and there we should look for adding positions. But now the final stop loss should be around 20,750 for holding any long positions. So 20,750 is now the trailing stop loss for holding positions, and as we mentioned, 21,050 is the zone where we should look for adding some long positions. For the Bank Nifty, there also we saw gradual sell-off. The Bank Nifty managed to sustain above the mark of 46,800, which is positive. Now the resistance is around 47,600. Above that, the chances of hitting 48,000 would turn bright. Support will be at 47,100 and at 46,800. But today we need to focus on IT companies, as this specific news flow is supportive or supporting for IT and IT stocks. So that's the reason Nifty IT stocks should be on the watch list in today's state. Along with that, we can expect some activity in metal companies. So broadly, we are of the view that the markets have formed a fresh higher high, and now it is going to form higher low at 20,750. So that will be the next support level, and below that only we can expect weakness. Otherwise, we can expect gradual upward activity in the near future. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.